We have two more to go: the euro pound, the Aussie yen, and the Aussie dollar. Uh, the euro pound uh, is pretty much like it's the opposite of what's happening between the I did the pound Switzerland. I did already. You can see it in the recording tomorrow. The euro pound and the is similar to what's happening in the dollar yen. They are the two strongest, and they're fighting, and you're not really getting any clear movement in either direction. In this case, you got the two weak one. The euro is extremely weak. We have a trend change in the euro, and the pound is also weak, and therefore you're getting this. Look at this for 2 weeks. We are pretty much if you are long the euro pound, then you are short. I mean, this means that you're short the pound Swiss. So what I'm saying is, when we are, the principle is not they are negatively correlated or positively correlated. I'm not doing a correlation right now, Leonard, but what I'm trying to tell you is, when we're trying to buy or sell, we're trying to buy the ones that are really strong, and we want to short all the ones that are really weak. So I want to buy the strongest and sell the weakest. In this case, when I'm looking at the euro pound, I am looking at two weak currencies, extremely weak currencies, and that's why when you look at the last 10 days or so, the market for the pound Swiss, the euro pound did not really go anywhere. Why? Because it is the crash of the weekends. That's all. So there isn't really any breakout in either direction. But what this looks like is that the euro might have an upper leg on the pound. But to be honest with you, I wouldn't touch the euro pound now. Uh, it is still to the downside, but trade closing at 87.44. My beginning to sell, my structure point is 86.36. So we're up. We're about 150 points really from having a sell, and my buy signal is going to be around 88. So in either case, my entries on both sides are quite wide before I have a clear entry on either direction, because as I said, both of them are really weak. But if somebody is or really is desperate to trade the pound yen for whatever reason, then your buy should be above the 88. You want to be buyer above 88, and you're going to place your stop. I mean, as you see, this is in a sideways pattern, so there is the stops are you're going to buy here, and you're going to place your stop right there. So in this case, if you're going to buy at 88 or 87.80 and your stop is below 87, so you're risking 80 pips on that long position, and that's a point. And I mean, that is a heavy pair, so you're putting at $1.6 per pip, so it's 160% bigger than your normal position. So even though this is 90 pips, but dollar wise it's about $160 or 160 normal pips, so it's quite so to me this is quite a nosy. I wouldn't really and it is in a sideways pattern, so what will happen is it's going to go up to the 88, fail, turn around and come back down again. So this is a sideways market, and if you want to be trading it, try to sell it. Actually do the opposite, trying to selling it at 88 and buy it back because this is what's been doing all through. You can see all this through. We had this push up, and then from that moment from the it's been moving sideways. So I would literally step aside from the pound euro pound from February 1st for the last 10 days. It is in a sideways pattern doing nothing, so it's going to be a whipsaw. So I suggest we leave the euro pound to the side right now. Okay.